Welcome to Subramani. I'm going to talk about a concept which Mr. Graham has also spoken about, but starting at the very beginning. There is so much noise in the financial media and generally in the media that for most investors, ignoring the media would be extremely helpful, because the media, when I say media, I mean information or data which changes on a day-to-day basis. If somebody comes and tells you equity is good for the long run, or do an SIP, I mean, all that put together is not more than 200 words in personal finance. But the worry is when you are given data and views on the market on a day-to-day basis and you have no clue how to deal with it. Let's say you bought a car worth 30 lakhs and you drove out of the showroom. Just as you were driving out, somebody outside said, "Sir, this is a luxury car, the value has fallen by 40%. It is now worth about 28 lakhs. Or rather you bought it for 30, it's worth about 18 lakhs. What do? Do you get off the car and say, okay, here, give me 18 lakhs and I'll give you the car? You don't, because you bought it for using it, right? Similarly, you bought a house for 4 crores and somebody tells you it has fallen 10%. So do you go and sell it off for 3.6 crores? The answer is no, because you bought the house to live in it, you bought the car to use it. Similarly, when you buy equity, you have bought equity because you have done your research, you know it's a good company, you know you're going to keep it for a long time, and you are here to sell it after maybe 5 years, 10 years, 20 years, whatever, or create a heirloom and tell your kids, don't sell this is a good company, sell it only in case of in case the company performs badly or something, but I bought this for a lifetime, right? This is what you should be doing. Unfortunately, when you have equity shares and the price is thrown at you every day, right? Every day you are told, let's say you bought a share for 1000 rupees, constantly you are told this is 750, this is 2000, this is 1200, this is 1500, and you get carried away by that, right? So what happens is, when you buy a share for 1000 and next day the price is there, say 955 or 975, you have no clue what to do with that data. The best thing to do with that data is to ignore it. And this is what Mr. Graham says, that when Mr. Market keeps on throwing a price at you, I think he says $1,000 share, and every day, if constantly the market gets over enthused and says this is the price. If you had in fact, I think Graham says, if you had a partner who constantly values that $1,000 at higher or lower value, what will you do? Will you just give it away and go, or will you buy more of his stake or whatever? So suppose next day he comes and tells you, this partnership of mine, partnership of ours is worth $2,000, 1,000 of yours and 1,000 of mine, but I think it's going to be in very bad shape, so I want to sell mine for $500. Maybe you will just buy it, right? Or if he says, oh, it's $2,000, maybe you will sell it. But will you really act on it on a day-to-day basis? Because you have taken some effort to put in that $1,000. Let's call it 1 crore of rupees. You have done research, you have bought a share, you have put in effort to say, okay, I will sell this at 2 crores after 4 years or 5 years, whatever. That is your estimate of what that price should be. But ignoring is not very easy, because look at the kind of headlines which hit you. Ambani's have lost 200 million US dollar in 3 weeks or 2 weeks or something like that. Adani's market cap crashes 30%. Look at the words that they choose: crashes, falls, dramatically wiped out. I mean, there were headlines which said in Templeton debt fund you will lose 85%, right? You will lose 85% of what you have invested. Will it create panic in you? Of course it will create panic in you. That is what it is supposed to do. Or somebody saying, oh, PSU shares are up 40% in the last 1 year. What is that headline useful for? Are you supposed to go and buy all the PSUs, or are you supposed to sell the PSUs saying, oh my God, it's up 40%, let me sell? There is nothing which you can do with this kind of headline. So be careful about what kind of headlines you are reading. So every day there is some headline saying why the market went up, or why the market will go down tomorrow, or why the market will go up tomorrow, right? Every day there is some such story with lot of data saying, oh, US employment figures are very low, so the market will go down, or interest rates in the US have been jacked up, therefore market will go down, anything and everything, and next day they have the temerity to come and tell you why exactly the opposite happened, and giving you the same reason, saying the employment figures in the US were bad, but they were already discounted in the market, therefore the market went up. Like, so you are likely to get more and more confused when you see this, and the greater variation is in the daily, monthly returns, right? Forget the daily, monthly, even on an annual basis, your interest rates or your stock market do not look too great. There is a very high standard deviation. So if that is true for the annual thing, 1 year, what would it be for a quarter, or for 6 months, or for 1 month, or 1 day? There are daily averages where they chart it hourly. And there are people who will read something like this and forward it to you on your WhatsApp also. So you think, oh my God, what happened? I bought this for 119 yesterday, today it is 117. It hardly matters. If you are going to sell it at 330 after 3 years, then how does it matter whether it is 119 or 117? So it's very important for you to realize that all this is being done to attract the traders. Imagine somebody telling you buy Coal India at 119, you can sell it at 330 after 3 years. You will not visit that website, or you will not see that YouTube blog, or you will not read that piece of shit for 3 years, right? That's not important. So every day they have to come and tell you, look, it was 119, now it is 121, you should book your profits. This is meant, I think the financial media is more oriented towards the broker, not towards the investor, definitely, and not even towards the trader. The trader is not making money here. When you try to trade for 2 rupees and 3 rupees, the people who are really making money are the broker and the state government, which is charging you STT, right? They are the only people making money. You are hardly making money, in the sense, for the risk that you take, you are not definitely making money. So some of the mutual funds will give you better SIP returns than what you are getting as a trader. Then the question to ask is it worth spending so much time trading? Because if you put a cost to your time, if you put a cost to the telephone calls that you make, if you put a cost to the internet that you consume and all that, definitely you are not making money in any of the trading that you are doing, unless you are a good trader and you know how to trade. That's a different thing. Unfortunately, in the bull market, everybody feels like a good trader, and today, unfortunately, there are just too many people in the media who are trying to tell you what to do and saying, oh, I am an expert, I have been in the market. Let's face it, if you have been in the market since 2003, which means you have 20 years experience in 2023, it does not mean anything, because you have not seen a long recession. You have seen short recessions. You have seen markets falling for 3 months, 6 months, etc. But you have not seen the market falling for 5 years. Do you know how you will react if the market does not go up for 5 years, say 1996 to 2002, right? That would be 4-5 years, and the market just didn't go up. You could have got zero returns in your portfolio, right? That did happen. So if it happens from 2003 to 2020, 2023 to 2028, the market doesn't go anywhere, and say the market is at 60,000, 65,000, let's say 70,000 on the Sensex. How would your reaction be? Right? That's not a question which the market will ever, the media will ever want to answer. And nor will the media tell you that they are doing all this. What are they doing all this for? They are doing this for eyeballs. And today, more dangerously, many of these YouTube vlogs are here to get more eyeballs from you and from everybody else, and therefore get referral fee, because they'll say, you should open an account, the details are here, please open an account with so and so broker, right? So then you lose money, you gain money, then they say, oh, I can only tell you what to do. It is up to the broker, and because of the broker you have lost money, right? Nobody is going to blame you, or rather nobody is going to accept that they misled you. So it is your mistake of listening to these people and saying, oh, I was misled. You were not misled. You wanted there. You wanted to think that you will get 30% CAGR in small cap funds permanently. That's not going to happen, right? So 30% is because maybe the PE changed. So the PE has to again triple for you to get that 30% return. It's not going to happen. So accept that it is not going to happen. understand, read books maybe, but read books rather than magazines. Don't watch those people who tell you on an hourly basis what they know what is happening in the market. They don't. Even if something happens in the market, they do not know because of what it happened. So trusting these people, listening to them, I don't know how sensible it is, because I just did an article for Indian Express on exactly this, so I was just checking out whether I've said something more than this. So no, largely yes. One more thing which I've said is, in the longer term, the standard deviation goes down. So yes, you will make money in a good quality equity held over a long period of time. But if you watch this on a daily basis and see the standard deviation, it could happen even in good shares, even in a Reliance or a HDFC Bank or any of those shares also. The market fluctuation could happen, right? Somebody is buying, somebody is selling. Somebody has a lot of money and they say, oh, I want to take a 10-year view, so they're buying. Somebody is taking a 3-month view. All these people are in the same market, in the same pipeline, buying the same shares. So these kind of fluctuations will happen, and if you are a trader, you might just panic. I mean, how many times have you seen this news item saying Ambani's lose $20 million or $2 million, then all PSU shares are up 40%. What are you supposed to do, right? It's going to scare you. So then there will be FOMO. You'll say, oh my God, I missed the PSU share. Should I buy it? Or say, oh my God, the PSU shares are up 40%, which is too high, so should I sell? None of this is going to, you're going to remember. Just imagine if today is a Monday, just imagine what was the headline last Monday. Very unlikely that you remember. So learn to ignore the financial media, including this blog, because if we are trying to tell you something, if we are trying to, and you are getting scared or you are unable to use that, and there is nothing new that I am saying. I've said this many times in many ways, saying, look, this is what it is. This is what is happening in the market. This is how the media is telling you things which may or may not be true. And it is exaggerating, so, and it is scaring you. So there is FOMO, then there is recency effect, saying the markets have gone up 25% this year. Does not mean market is going to go up 25% next year. In fact, it's a good reason to think the market will come down next year. But then they'll tell you why India is the only country in the world which is doing well, blah blah blah, therefore you should be buying. I have no clue, right? So I'm very clear. We are a 3 trillion economy. We are going towards the 10 trillion mark. At some stage that will happen. So go and see what America did during that period. Maybe America grew by 15-16%. Does it mean India will grow by 15-16%? I don't know, because the US was a very protected market. They had the whole world to themselves. India does not have that great advantage, right? So see what is going to happen. Look out on a regular basis, but don't get carried away by whatever we are telling you. Be careful. Trust, but verify. Thank you.